Hi everyone, and welcome to the third installment on our follow-through of what key commodities are doing as we have a very interesting week with NASDAQ roaring again to the highs and the SPY trying to follow in kind, as well as the Dow. IWM, small cap, still lagging behind. The historical event about the spot ETF approval of Bitcoin. And of course, as you'll all wake up and already know, the CPI numbers tomorrow morning at 8:30 Eastern Time, which you can kind of assume from the way the market's been behaving that people are anticipating nothing too great in terms of inflation numbers, and that would be pretty much in line with what we think as well. Although we don't think it's going to stay that way, we're still looking out maybe to like spring, summer, where that changes, and most likely it will be something to do with the dollar, which did go down a little bit today after we talked about it yesterday. And of course the Fed policy, which in a disinflationary environment globally, you could say reach kind of that 2% goal, which means most likely we'll start to see the Fed easing up, which of course that can be a catalyst for anything in today's current environment. But let's start here by looking at gold. Now I've given you a different chart to look at in gold today because I really wanted you to see the momentum indicators, just like we discussed it yesterday when it came to the dollar against the yen. Now in this case, we still have a golden cross. We're still above the 50-day moving average. We talked about that key level of around 2029. Well, guess what? That is exactly where this closed today at 2029. So essentially, here is our 50-day moving average. That comes in at 2020. So let's talk basically what could happen on CPI. It could be an initial reaction of bearish for gold, especially when we talk about the momentum in a moment. But let's say that we hold this 2020 level. If we hold this 2020 level and we can get back up above this 2035 level, we've been calling it really 2033, so 2335, 33 to 35, I would say that that's probably going to be an initial move higher, right? Maybe the CPI comes in a little bit higher, and so gold immediately reacts to the upside. But I think there would be obstacles, and they're the same obstacles I've been talking about all along, which is 2045 up to about 2053. We get through that 2053, I think that we're seeing the writing on the wall. Now, on the flip side, of course, if we break down under that 2029, I would be looking, first of all, at this low that we had from the other day, which is 2022, very, very close to 2020. And it's possible that we pierce under this 50-day moving average and come back through. So that closing level tomorrow, up or down 2020, is going to be also important from a more intermediate term. And if we do break it intraday, where do I think we would stop? Most likely, I think we wouldn't get much lower than 2013. Now, go down here to the momentum. This is not pretty. We're having a bearish divergence in that this is under the 50 while the price is still above. So if this is any indication of what could happen, and here's, by the way, that mean reversion we talked about yesterday when I was instructing you on this, it would mean momentum would continue to decrease underneath that 2029 and underneath that 2020, and we might wind up touching down on that Bollinger Band down here. But it could also mean that this was kind of just momentum has slid down because the interest in gold hasn't been all that great right now, especially since NASDAQ's rallying like crazy. And we could actually see a pop back over the 50 in momentum. But nonetheless, right now that bearish divergence sort of suggests that we'll test the downside before the upside. But of course, as you know, anything can happen. Now in silver, we have a very different picture. The picture we have in silver right now is, first of all, we're in a bearish phase because the 50 is under the 200, so this is well underperforming gold right now. And also, if we take a look at the momentum indicators, also in a bearish phase, we are actually under the Bollinger Band, which means that silver might be even more important to watch tomorrow for next direction than the gold. Why? Because we could wind up with that mean reversion, just like we saw back here. After it looked bad, actually it started rallying a little bit off the lows, but then you had that mean reversion pop, and we had not an unbelievable rally, but if you sat with it, of course, then you wound up into a much bigger rally. So what I'm saying is that we can determine whether or not we're going to get a mean reversion based on what happens here with price. And that would mean, number one, is if you take a look at the basis of support, 2295 is really anywhere I'd say from 22.95 up to about 23 is really your number. We hold that 22.95 to 23. I would say maybe if you really wanted some level of confirmation, I'd be looking for a move up to over 23.15, but then I would think that this starts to look like a bottom and that mean reversion happens and we start to get a pop. Underneath that level, of course, underneath that 22.95, 22.97, then this starts to look a bit weaker. So that's kind of my area right now. Watch for the momentum reversal on a mean reversion. Watch for a move back over this 23 area. Today's closing price, by the way, was at 23.06. So I like that 23.15 we were talking about over there. Then I would start to say maybe we'd go up. And what would be my first target, especially if it's some kind of a knee-jerk reaction on the CPI numbers? It could be up to about 23.49, 23.50, and then we would see what happens from there. So moving ahead now to the crude oil chart, what we have right here in the February contract is a failure once again of the 50-day moving average. After yesterday, we popped right back above it, had an inside day. We didn't resolve that inside day because you can see that today's action, we didn't take out the 74, nor did we take out the lows back here under the figure 70.12. But what we did do was close back under that 50, so that gives us a nice pivotal area. We can call it 72.15, 72.16. So once again, we're still range bound. I still see the potential for a double bottom. Actually, the momentum indicators that you're not seeing here are indicating probably maybe a little bit of a bullish divergence, so that's good. So we're going to keep our eye on this, right? And if we can get back over that 72.16, 72.25, then I would say we'll get another push to the upside, and of course we'll get resistance along the way, 72.70, then back up at 73 and 73.10, and of course, you know, where the rubber meets the road is over here above 74. On the downside, though, if we cannot get through 72.16, then we'll be looking for what happens at that 71.60. Remember, that was also an area that was support, then turned now into resistance, and also 71.30, which is right about where this closed today. Actual closing price was at 71.32. So under 71.32, 71.29, then I think in order for us to negate this higher low scenario, we would have to break down under this low right here, and this low right here is like 70, a little higher than 70. Let me give you the exact number here. The low here this day was 70.47. So underneath that 71.29, 71.30 level, we're going to look at that 70.47, and if we break down under that 70.47, then we are now, by the way, getting out of this higher lows, and it could mean that we'll have to take another visit down to lower levels, maybe somewhere around 68.80 to 69. And finally, let's take a look at natural gas. Well, I did say yesterday that after this big move up, we probably would have some digestion, possibly an inside day, and that is exactly what happened. And also, we are now back below the 200. So we did not confirm that improved phase change to accumulation. So what has to happen tomorrow? Well, it's an inside day, right? So we don't get really, really excited on inside days until you take out the outside price at 339, 340. But let's forget about that for now. Let's just take a look at pivotally what has to happen. 315, that's going to be your first area. We get back over 315, then I would say this inside day resolves to the upside, and then we can start looking at today's high, which was at 32.26, and then of course back up to that 32.40. And if we can't get back through this 200-day moving average around this 315, remember we said that this could correct down to about $2.90 or $3. It kind of did that today with today's low at $2.95, which is exactly where we thought it might stop. So 295, 303, 315, these are the numbers to keep in your mind. Then we can look back at these highs here at 323 and then up at 340. Under that 290, 295 area, of course, we could see a further correction pretty much down to where more major support is at around 280. Okay, so I hope that's helpful. I'll be with you again soon. I don't think I even told you who I was in the very beginning of the video. So this is Miss Schneider, Chief Strategist at marketgauge.com, signing off for today. Have a great one. Bye for now.